All right, traders, welcome to today's recap. This is Christian from TTG Trade Group, and it is Wednesday, September 21st. So we got this big event out of the way. Did we learn anything? Well, this was a very difficult day to trade because the whips, there was a lot of whipsaw going on in the market. Things kind of changed very rapidly as Powell spoke, but you could see that the direction ended up down and is still kind of going down here in the after hours. So what transpired? What happened? So first of all, whenever we have a Fed day, right, you get the announcement and that comes at 2 o'clock, and then there's the market moves in one direction. However, a lot of times we don't always finish the day in that direction. And, sometimes we can finish the opposite direction, right? So we actually had a little bit of everything today. It actually felt a little bit, today's price action was very similar to what we've been seeing in 2022, meaning starting down, you get a little bit of a bounce, but it's not a big bounce, right? And then if you don't take profits into that bounce, the market ends up going lower, which is what we've seen for a lot of this year, even though we're still above the June lows. But it just kind of felt like, hey, this is how the year's been going as well, right? Short-lived bounce, and if you didn't take advantage of the bounce, right, you get penalized if you're playing on the long side. All right, so I'm going to try to keep this a quick video because I have to get out of here early because I have something to do with my family that I've got to get out of here for. So, but you notice that September is gone, right? So September, so today, 75 basis points, that's what the Fed was signaling, and that's what the market, was telling us as well, looking at Fed fund futures. So what does the picture look like now? Well, it looks like another 75 basis points, which again was what we came into this day looking like, that it was going to be 75 basis points for November, which is about 5 weeks away, right? Because it's the beginning of the month. And then when you look at December, right? Now we're looking at another, possibly another 50 basis points. We don't know. Could be 25, could be 50. I would say probably closer to 50. Again, they move in 25 basis increments, so that's why you kind of have to, approximate, right? And then once we get to February, then we're looking at possibly, right? Because again, this would, if it was perfect, it would say 1.5%. So this is 1.4. So then we're looking at another 25 basis points. So nothing has really significantly changed from coming into today, but that's not really a positive thing. The reason why we had this whipsaw, in my opinion, right, is because when Powell started to speak, right, things started to change. He talked about how we are now seeing some pain in the real estate market. So he started to say these things like the rate hikes have started to have effect. And then he started to kind of answer for other questions and talk about the labor market, saying that the labor market is still tight and that he expects that, it kind of seems like he's okay with seeing some weakness further in the labor market to bring down inflation. And again, he was adamant about getting inflation down to 2%, right? So even if he said something like, hey, it's going to be very, very difficult to get inflation down to 2%, 3 or 4, then I would have said, okay, at least he's kind of acknowledging that there's some systematic risk here. With what is going on globally with the energy crisis that this world is going through right now, right? With the Russia war that's going on. But he didn't say that. They're still very much, stubborn about getting down to 2%. And that's why you see this market reaction going back to the direction that it was originally going in. So you could see, like, we're selling off down here, now down about 2%. And it's a very big reversal for the day. So I thought that we did have a chance in here, right? There was a virgin point of control that if you're a regular viewer of my videos, or if you're a member of TTG Trade Group, I said, hey, this could be a potential spot, right? And we took this out and we did reverse. This was on this particular candle, so we did reverse. However, it's not sticking, right? And there's nothing that says, in terms of volume at price and what I look at, there's nothing that says that it has to kind of mark a reversal, right? Sometimes we do blow past them. So that's the case, and especially on high volume, right? We can get through these virgin point of controls again, which is an area of high volume that we haven't revisited. So that's that. We did get past it, and this market is, heading lower. So, so what's the takeaway for, okay, so we talked about the Fed, right? So what's the takeaway in terms of trading? Well, we're still, and this has been the case now for more than a week, but we've been below all the moving averages, right? So since we got back below, this is the CPI day. Since then, we've been trending lower, and there hasn't really been any change here. So that's kind of the story right now. Also, it's September 21st, right? Why do I bring up the day? Because so we're now almost two-thirds, I guess, almost two-thirds of the way through the month of September. We know that September is the most seasonally weak month of the year. This is basically a month to just try to get through and not come out with too much damage, right? I was talking about like my P&L for the month so far. I started up nice positive for the month, but I'm down a little bit for the month. But that's not really a major cause for concern. The goal to get out is to get out of September without any major without any major pain, right? So down a couple percent or something like that. Small losses are fine, right? But this market is really, really tricky. Today I thought was tricky with the rebound and then the give back. And here's my trades for the day. I kind of was thinking that we might get either some type of move to the upside, as we have been historically this month. Historically this year on Fed days have been actually pretty strong. So I was looking for that to play out the same way. It didn't, and I had to get rid of some trades. Thank goodness that, again, taking profits has been a must when you're getting them, when you're getting the price action to the upside. So, I took off some Tesla, earlier today, right? I added some, what did I do here? I added some Tesla at 307, took some off at 310, took some more off at 313. And then, if we look at this chart, and I'm going over this Tesla because this is a name that I've gone over a few times over the last 2 days, but I said, hey, if it slips back inside value, which is 306, I don't want to own it, right? I only want to own it if it starts to trend above the value area. So it is what it is, right? So I'm out of it, 304, and I was trying to be, again, you have to, being patient in this market is a fine line, right? Once you start to go below, where your cost basis is, you really don't want to be too patient, right? You can always get back into a name. And I did that with a couple other names too. I like this, I liked how the semis were acting earlier, but keep in mind, the most important print, right, is the end of the day print. So all this whipsaw action and so on and so forth, you kind of have to forget about what was strong in the beginning of the day. You have to take note of how things look at the end of the day, and that's fine, right? So it was looking like it was going to be a really nice day for me. It didn't end up that way, because I had a couple of these longs on, coming into today, and I added to some long exposure. But you could see I kind of just got out of a good portion of it. I also threw back on this SQQQ, which is 3 times short QQ, as I like to hold this when we're below the moving averages. And I even added this kind of late. I didn't put that on at the high of the day. Oh, look at that. We took out another VPOC down here in NASDAQ. That's taken out too. So I might take another target here. But it's funny. I was late on this. It doesn't matter, right? As fast as this market is moving, you don't have to be too cute, right? If you get the direction, if you see that there's momentum to the downside right now in this market. So that's it, guys. Like I said, I'm going to keep this video short and sweet, but closing print's most important. The trend is still down. Have to get through September because that is the worst month of the year, especially in a midterm election year. So that's no surprise, from where we started this month. And we just kind of have to go from there. I do think, I mentioned this because I was reading Helene Meisler's column this morning. She looks at the daily sentiment index, the DSI. These things are getting pretty darn near oversold. So when you look at the S&P, I think the DSI was 10 coming into today, and the NASDAQ was 13. So we're probably going to be in the single digits, which means things are getting pretty washed out. So that's another thing to kind of keep in the back of your mind. All right. So we've been going down now for a while. So eventually we will get some type of a bounce. Why do I know that? Because markets don't go down in a straight line. They don't go up in a straight line either. All right. So that's it. I basically reduced some of the risk that I put on. Overall, my overall risk is lower than it was coming into today because I respect the price action, right, and live to fight another day. And again, just being down a little bit as I am now for the month, it's very, very easy to overcome, especially the way that I trade. All right. Have a great night, guys. I'll see you tomorrow.